Cryptocurrency markets saw wide-scale adoption in the last year, with billions of dollars being poured into the market. However, this year has proved to be the complete opposite of that, as the prices of major cryptocurrencies have come crumbling down. With massive losses to a huge number of investors, many influential people such as billionaire Mark Cuban are comparing the present cryptocurrency market to the early 2000s dot-com bubble, which was fueled by speculation and unproven online firms. Cryptocurrency market in general has been stumbling for the majority of this year, with May 9, 2022 proving to be a devastating day for crypto investors, as Bitcoin, along with Ethereum, hit 10-month lows, which resulted in the crypto market as a whole to be worth less than half of what it was in November 2021. Following a strong run in Q4 2022, when Bitcoin reached $69,000, the cryptocurrency market's value has plummeted, with almost $200 billion lost in last month alone. Bitcoin, the most popular cryptocurrency, has dropped to roughly $30,000 per Bitcoin, losing more than half of its value since all-time high. Tech equities have suffered a setback as well. The correlation between Bitcoin, S&P 500, and Nasdaq has also increased in recent months. Since January 1st, the 30-day average of the Bitcoin-Nasdaq score has been approaching an exact one-to-one connection. This link became clearer after the Federal Reserve announced this week that it will raise interest rates by half a percentage point. This was the beginning of a drop in the value of Bitcoin and stocks. The Shark Tank investor and owner of the Dallas Mavericks, billionaire Mark Cuban, who became an early face of digitally created wealth decades ago, has been a prominent advocate for crypto as something worth taking seriously. The brilliant investor foresaw the dot-com bubble's impending collapse and was able to safely exit the market thanks to a smartly crafted insurance plan that covered his shares in Yahoo, one of the first pioneers of the internet. Before the crash happened, the arrival of the internet resulted in astronomical gains in the mid to late 1990s, which is now known as the dot-com era. These gains resulted in an explosion of enterprises that, with the benefit of hindsight, didn't have good fundamentals. However, that didn't stop people from making investments in them, and they did it without completely comprehending what they were doing. They bought stocks as they were enthralled by the hype and wanted to be a part of this new and exciting sector. This speculative investing caused internet-based company valuations to skyrocket, sending the Nasdaq Composite Stock Market Index up 400% in 5 years before collapsing in 2001 and 2002. When the dot-com bubble burst, many of those businesses failed, and investors lost all of their investments. However, share prices of the companies who survived that crash, such as Amazon and eBay, are still in business today. Mark Cuban, who is now the owner of the Dallas Mavericks basketball franchise, was able to amass a big fortune in the 1990s, when the internet was still in its infancy. He first earned a major amount of money after the sale of his computer consulting firm Micro Solutions, and then with the acquisition of his online radio company Broadcast.com by Yahoo for $5.7 billion in shares. Currently, with a broad portfolio of blockchain-related companies and cryptocurrencies, he now primarily invests in the crypto market. It's not the first time Cuban has drawn parallels between crypto and the evolution of the internet. He remarked early last year that the development of blockchain technology reminded him of the early days of the internet, and that current blockchain companies are similar to internet pioneers. He recently stated that watching cryptos trade is just like watching the internet stock boom. Experts try to justify whatever the current pricing is, just as they did during the dot-com bubble. However, Cuban admits that Bitcoin and a few other cryptocurrencies will be similar to dot-com enterprises that survived and prospered after the bubble burst. Despite the fact that Cuban has himself invested in cryptocurrency startups and even Bitcoin, he constantly warns new people to properly research before investing, as they could lose their well-earned money by investing or trading in Bitcoin or other cryptocurrencies. At the same time, many supporters of Bitcoin compare it with gold and argue that it is a hedge against inflation and the US dollar, as well as a survivor of any economic or infrastructure collapse. Bitcoin bulls believe that because the supply of Bitcoin is limited by its design, the price will rise as demand rises. To that point, Cuban said that, just like gold, crypto is driven by supply and demand. However, all of the tales about debasement, fiat, and so on are nothing more than mere sales pitches. The only thing that matters is the scarcity versus demand. The multi-billionaire said that after the first wave of intriguing apps and non-fungible tokens, crypto is entering an imitation phase, where too many companies are failing to bring new utility to market. According to him, the blockchains that will emerge from this will be those that use smart contracts to boost corporate productivity and profitability, rather than those that are based on models with little to no use. Smart contracts are basically digital agreements that are recorded and kept on the blockchain, and are used to power decentralized finance applications and non-financial tokens. They are also required for the information of decentralized autonomous organizations. Currently, smart contract cryptocurrencies are competing fiercely to attract projects to their ecosystems. As they compete for market share, several have granted specific programs to encourage development. Cuban believes that this is not the best way. Instead, he believes that the blockchain should stand out by exploring ways to deploy smart contract functionality in the real world. Furthermore, even though NFTs have become increasingly popular in recent years, with developers such as Beeple and NBA Top Shot selling them for millions of dollars, recent NFT sales have dropped as more makers crowded the market. From January to March 2022, the average daily transaction volume on OpenSea, the largest NFT platform, was down more than 55%. Cuban has also expressed concern about people who aren't generally knowledgeable in investing getting engaged, claiming that a surge in day trading, aided in part by mobile apps, has led many people to seem as experts as markets rise. All in all, cryptocurrency crashes can be frightening, especially if they prompt you to question your initial investing idea. Cuban's overall view of the market is that cryptocurrency investors should always be ready for a crypto crash similar to the end of the dotcom era. That is the reason why you should only invest money you can afford to lose, as even the most solid projects can lose a lot of money. Many cryptocurrencies might eventually go bankrupt, as you may have recently seen with one of the top 5 crypto projects, Luna. Other than that, always make sure to thoroughly search each project and try to look for those that add value to existing projects rather than merely copying them. That is it from today's video. If you found this video helpful, make sure to hit the like button and subscribe to our channel.